And welcome back to the Money Effect, where I bring you all topics, news, money, and finance related. Disclaimer: this is not financial advice and strictly for educational purposes, and it's just my opinions. Hit a like and subscribe for the YouTube algo if you like the content. And now that's out the way, let's go. So the main what's been going on in the markets this week, and the main topic, of course, is we're going to concentrate on is what's been happening in the crypto market, and it's been it's been a crazy week, and it's probably I mean, there's been a lot of disasters in the crypto industry. Obviously, even this year, we've seen Luna collapse, that was meant to be a stable coin. We've seen Celsius, which was offering people high interest rates, collapse. And even before that, we've seen Mount Gox, where crypto somebody just took people's money. There's been a lot of in crypto, and this guy is another stain on crypto, and he's probably going to be up there with, if you Google Bernie Madoff and people like that, it's going to be one of the big scandals, not just in crypto but in finance. And so let me just explain this individual here, Sam Bankman-Fried. He's actually only 30 years old. His net worth at the start of this week was 15 billion. Now he's basically, well, we don't know how much money he's stolen, but it's not 15 billion anymore. And he was basically head of one of the largest crypto exchanges. Crypto exchange in simple terms is a place where you buy and sell crypto, and it was literally fourth on the list. So this is how seismic the shift is. And in essence, I mean, he's saying he fucked up, but this crypto exchange collapsed, and it just had such wider ramifications across the whole crypto universe. But yeah, this guy here, probably in a few years, hopefully he'll end up in jail like Elizabeth Holmes. They're going to do a movie on her if you haven't heard of her. A company called Fanos. You can Google her. Again, another one like that. So um, yeah, it's not been a great week for crypto, to be honest. And this guy is definitely going to be somebody you're going to hear a lot about. So the collapse of an empire. Again, you know, this was a big empire. This was a guy that was, he was buying up assets left, right, and center. All these Celsius. I think he even had a deal with BlockFi. They were near collapse. Celsius that went collapse. He was buying their assets. So he was literally becoming like the Rockefeller of the banking industry, the JP Morgan, buying up all these distressed companies that had suffered issues, and he was basically positioning himself as the savior of the crypto market, and literally a guy that was doing all this just to kind of um we've seen some breaking news here because they're saying that there's some unauthorized transactions, but we'll get into that one. But yeah, he was literally just seen as the savior of crypto, 30-year-old coming into this industry, and obviously it's just turned out that it's just a stain on crypto because he was literally doing, and I'll explain what he was doing, but he was literally doing some very high leverage stuff, and there's nothing wrong with that, but the way he was doing it is the problem that's occurred. And a guy that's literally said he was the savior of crypto has literally put another stain on cryptocurrency, and it's just going to be under further scrutiny. It's been such a bad week. But let's start off. What kind of happened? So, at the start of the week, we had a spat between. So going back, actually, we had the article that came out on CoinDesk, and they were saying that FTX is an exchange, and within separate to FTX, another company that this guy owns, Sam Bankman-Friedman, is called Alameda Research. That's more the trading side of his empire. But there should be two separate entities, nothing to do with each other. There was a CoinDesk article that came out and said this Alameda Research, its balance sheet is basically full of FTX coin. Now that can't be right, because if it's full of FTX coin, that means it's full of its assets are basically on the trading side, which is taking high leverage bets. It's basically full of the assets are basically the same as the exchange, but the exchanges should just be customer accounts. So already there was a problem there. The Binance guy said, he's pulling out his money. He doesn't like it. He had 500 million invested in FTX. He said he didn't, after that article, he didn't like it. They had a little Twitter spat between them. And then there was an article saying FTX agrees to sell itself to rival Binance within a day. So now that, because it had a liquidity square. Once the article come out, Binance says they're taking out the money. Everybody wants to take their money out. Then FTX agreed to sell the rival. Now this deal collapsed. The Binance person said, "I've looked at the balance sheet. It's not great." And that now just sends ramifications, because if he's looking at it and he's willing to lose 500 million to not take on a risk, which it actually turned out that the whole was at least 8 billion missing, then that just said everything. And then we had several investors coming together. They were all trying to damn low, but Third Point, all these guys were coming together. Tron, Justin Sun, whatever his name is, he's an exchange at Tron. They all wanted to say, could they buy the assets of FTX? 9.4 billion. So um, it was really like a big thing that was popping up. But I mean, in the end, it, it it collapsed. It went to bankruptcy, and FTX is now bankrupt now. So I mean, in 1 week, the fourth largest exchange has gone down, and this is another big momental moment in crypto, and we didn't think we'd see a big moment so quickly, especially after all the things that's happened this week. But yeah, in essence, that's what's happened. We've had lost one of the largest exchanges, and I'm going to explain. If we just look at some of the cryptocurrencies, obviously FTX token. So this is the cryptocurrency that's backed by under the FTX exchange. A lot of exchanges do that. They'll release their own tokens, and you can trade in their tokens, and it's basically just a way for them to raise capital. And I mean, look, you've seen that this token was what, I mean, okay, forget you know this was the bull market, but we can see, let's take the last 7 days. We've gone from like 25 to basically, and it's basically going to go to nothing. Maybe we'll get a little, and I'm not advising anyone to trade this, but there's always like a little pump. Somebody's going to hype it up, but in essence, this token is worthless, just like Luna. So it's just no money there, nothing there anymore. And well, look, it's even here again. FT Exchange has been hacked. So they're saying it's been hacked. So again, we'll get into that. So it looks like the website's been hacked. Who's hacked it? Maybe Sam Bankman-Friedman and his friends are trying to take everybody's money out. Another coin, one I did actually have exposure to, Solana, great project, but Sam Bankman-Friedman had a heavy interest in this coin, and obviously it's sold off as well. Like, if we look at the last 7 days, this coin is just literally plummeted again, halved in its value there. So it's just not been a good week. And one thing I say is, well, Bitcoin is just a proxy for everything. Like at the moment, the crypto market in general just moves in the same direction. So once everything is down, everything is down. Once everything is up, everything is up. So obviously Bitcoin is down, and Bitcoin is suffered from 18k hitting a bottom of 14k, and likely the fallout and who this person is not over yet. So listen, I've always advocated on this channel, if you're somebody that's got a long-term horizon, if you're somebody that believes in the power of cryptocurrencies, even if it's just you investing in Bitcoin, listen, nibble in, but you nibble in to get your average lower. But as I've said, and I'll say it with stocks, do not go all in at this time. Yes, we're getting to lows again, and so we've come down from 50, this is in pounds, 48,000, and we're now at 14. So I mean, it's better than investing here, but do not go all in. There's so many things. We've still got the whole interest rate story, and now with this FTX, there's going to be more contagion. And when I say contagion, one of the problems with FTX is that they had such a high a lot of these institutions, clever people, have got a lot of exposure to this, and we're seeing now already, like BlockFi, for example, they're literally going to probably declare bankruptcy. People got their money there, so you don't know how far spread this is. So it's not the end of the story just on this specific matter, and that's already together with all the other matters we had. So probably definitely looking to go lower in Bitcoin. I've been saying that for a while, 10, 8k, but I mean, I'm still buying every month. I still believe that this is going to be a generational opportunity, but am I dumping all my cash in? Am I going all in? Absolutely not. Um, and that's what I've been saying for a while now. Do not go all in, but you can nibble. And like I said, I do believe that once all these bad actors are cleared, we will get to a point where Bitcoin is presenting itself as a generational opportunity. And if it doesn't, then that means the whole crypto industry is going to fail. Because if Bitcoin fails, like you could literally get to a position. There's so many cryptocurrencies, but you can literally, it's going to get to you could literally just be a position where you could just put all your money, or not all your money, but if you want to invest in cryptocurrency, put all the money you want to invest in cryptocurrency literally into Bitcoin, because that is the standard bearer. That's the decentralized. And I'm going to explain what I mean by decentralized. But that's the issues we're having now, is that FTX was a centralized exchange and it's causing problems. So I'll get into that. But why did it collapse? So now FTX says they're pausing withdrawals. Now, Alameda Research is one of Sam Bankman-Fried's companies. This is the company that um, does the risky trading. So they take the leverage bets. They take the putting a pound down to get exposure to £100. They take the risky bets, and that's fine if they're taking the risky bets, because that's what they're there to do. If they collapse, cool, they collapse. The problem is, it's now seeming that when you was investing your money in FTX is literally just an exchange, a place where you can buy and sell things. Sometimes people say, you know what, I want to buy and sell things instead of you go into a marketplace. You go into, let's just say, I don't know, an Amazon or an eBay. You you want to buy and sell stuff, because Amazon and eBay, you have instant transactions to put your card details. You don't necessarily need to store your money on there. But say you did somebody that was regularly trading in Amazon, you might think, oh, you know what? I'm going to go onto Amazon and I'm going to put my money on there. And, you doing that, um, you just leave your funds on there because you think, I'm going to buy something next week anyway. And that's literally what FTX was. It's a place to buy and sell things, and then people tend to leave their assets on there because we're going to get into that again. It's hard to like move your assets. There's certain options you can use to take your assets off the exchange, but people say, oh, you know what, FTX is a big company, I'll just leave my assets on there. The problem is, it seems that this FTX, you're leaving your assets on there, and then they would literally transfer your assets to this company, Amalda Research, which is owned by the same person. And then this Amalda Research was taking very risky, high leverage gambles with your money. And that's now where fraud is coming in, because this FTX should not have been doing that. It's literally anything on this platform should have just been there. You're just literally, the only money FTX is making is standard commission from you buying and selling. They should not be now taking your money and then putting it with Amalda Research, and then Amalda Research is taking high leverage bets with that, which ultimately are going to benefit them, but it's not going to benefit you anyway, because you wouldn't even know they're doing this. And this is now why FTX is gambled, because those high leverage bets have collapsed, and those high leverage bets were used by people that invested. Me personally, I never had no money on FTX, and I'll get into that about where's the best places to kind of put your money. And that's it. Yeah, that's literally what happened. And it's really fraught, to be honest. And I mean, if this guy don't go to jail or get some jail time whenever it is, I'll be surprised. He's been buying a lot of politicians, and he said he was going to put £1 billion into the next US election in 2024. And I guess we know why, because he was trying to buy himself out of jail. So, but I mean, his money talks, so maybe he won't. But I mean, he's already admitted he's messed up and he should have done better. So, I mean, he knows he messed up and it's his fault. And it's fraud to me, because we've had this with banks, and again I'll get into it, but let's just get into it now. So the next thing is, what's the repercussions? Obviously, the main one now is regulation, and I think at this point, regulation is there's going to have to be for cryptos to progress, because the technology is going to change the world. It's undoubtedly, it's doing it now and it will, but for it to progress, it's going to have to be more regulated. Again, some people will say, well, isn't that the whole point of crypto, that it's not regulated? Yes, in a sense, but you're having too many people like this Sam Bankman-Friedman, who had his operations were offshore. They were in the Bahamas. There's no oversight, and hence why he was doing all these things. And it was only when CoinDesk leaked that article that it all comes to light. Whereas we're going to get into one of the exchanges I like is regulated. So listen, regulated things still go bad. We know in the UK, Royal Bank of Scotland, that was regulated. Look what happened there. We know in America, Lehman Brothers in the 2008 financial crisis. Look what happened there. MF Global. So we do know regulated companies, it's not just because it's regulated, it's not going to be no fraud. Yes, there's still fraud there, but at the same time, one difference is that people was able to at least get some of their money back when a company is regulated. When it's under the FCA, you have a limit of 75,000. You can get back. And in America, I'm not too sure, but they're regulated. You can get some kind of recourse. Whereas these people, they're just taking your money, doing these risky things, and you're literally not getting nothing back. In this case, it was a lot of institutions as well, a lot of hedge funds that was investing in this guy because they believed that this guy, again, they believed that he was like, going to be the guru of crypto, and they were investing in him as a person. Me personally, I had exposure to Solana, but I would never put my money on with someone like this. So, yeah, so they've felt the pain, and that pain now is going to ramify to ultimately us. So, yeah, regulation is going to come, and I think regulation is a good thing. I watched there's this show on Netflix about Spotify, and the whole idea of Spotify was to, you know, take away the record companies in essence, and then give the artists direct control of their music. Then, I mean, I don't want to do that. This is a spoiler alert, so if you haven't seen it, then I mean, maybe skip the next 30 seconds or a minute. But in essence, what happened is that the record companies ultimately own a piece of Spotify, and they ultimately making more money now than they was before. So the artists were still losing out. So, and I think that's what's going to happen with crypto. I think ultimately crypto started off as a peer-to-peer decentralization way for people to take their money back, and because it's been exploited so much, it's going to get regulated, and that regulation is going to help crypto in the long run, but it will probably take away the fundamental aspect of that peer-to-peer side of it, cutting out that middleman. But we're going to get some kind of regulation, and it's coming, and it's going to help crypto. And once it's regulated, then I think it's just going to help the industry grow, because that's what's needed now. There's so much trust that's just been gone. And again, okay, so let's talk about one of the main issues here. And again, I've just mentioned it: centralization and decentralized. Now, it's actually ironic that uh, although I just mentioned regulating, the actual problem is centralization. Now, what's the difference? Centralization is where you have an exchange that's central, that can basically, they own your assets. You know, you put your money into a bank, the bank technically owns your money. If the bank goes bankrupt, your money goes. Now, it's regulated, so you can go to the FCA and you can get some recourse, and you can get up to, like I said, if it's an individual bank, you can get up to 75,000 back. If it's more than that, obviously there's going to be other ways. But in essence, once you put your money into a bank, the bank owes your money. That's what crypto was created. It was created as a decentralized. So when you put your money onto an exchange, they don't own your exchange. You own your assets. You own your crypto. And that was the whole emphasis of cryptos. What's happened is, as the industry's grown, we're seeing a lot of these centralized exchanges are forming, and they're going bankrupt, and they're causing issues, and you're taking your crypto down with you. So in essence, that is what is going on here, the problem in cryptocurrency right now. And what options do you have now? One centralized, where do you where can you store your cryptocurrencies? One place is Coinbase. Now Coinbase is different to FTX because Coinbase is regulated. It's listed on the Nasdaq. It's regulated. Can they go bankrupt? Are they doing risky things? We don't know. Maybe, but they're regulated. They have to produce accounts. They have to have auditors. We're able to see, and as such, you can see why Coinbase initially sold off with the whole news, but then has initially gone up because a lot of people now that do keep their money on exchanges are going to flow to Coinbase because they know that, oh, okay, this is a regulated company that is at least safer than these unregulated exchanges that really have no oversight. And when there's no oversight, you let a 30-year-old that literally gained 15 billion in 1 year literally lose it all in 1 year. And that is an issue. So if you want an exchange, Coinbase. Now, again, people are going to say, no, don't put your money in exchanges. That's the worst thing to do. So what other options do you have? Hard storage. And we've just seen here an app is hacked, and well, no, where was it? Sorry. They're moving it to cold wallets. Cold wallets, in essence, is basically like you taking your cryptocurrency, you use the exchange to buy and sell the cryptocurrency, And then once you have it, you just move it to cold storage, i.e., a USB stick. They're called ledger wallets. Once you learn, there's so many videos on YouTube how to do it. One of the issues with that is if you move all your cryptocurrency to a ledger wallet, now if Coinbase or FTX goes bankrupt, you still own your cryptocurrency. You could then send that cryptocurrency to another exchange, sell it for pounds, and get the money back. Whereas if you keep it on an exchange like an FTX, they basically own your cryptocurrency. And once they go bankrupt because they're doing stupid things like taking high leverage bets for their other company, you lose out. And that's a problem. The problem with the hard storage is we've seen that if you lose that key, if you lose your USB, then there's no way to get it back. If you lose your, and this is where cryptocurrency is going to have to evolve. There's two areas it's going to have to evolve in the next bull run. Better storage facilities to keep your assets, which are easier because hard storage, like I said, you have to transfer it there. You have to make sure you don't lose the actual physical device, and also you have to remember your passwords because it's hard to reset as well. Then you also have the second option of software wallet. Now, software wallet in essence is basically like a software wallet in essence is basically like um, you move your crypto assets won't be actually on the exchange; they'll be moved to like a wallet. Now, Coinbase has their own wallet, so it's like but you can move it to like a third provider wallet, so it's a bit easier for you to do. And obviously, like if you lose your password and stuff, it's easier to get back into your wallet. And obviously, you can't physically use it because it's a software. Obviously, there's an issue with that is that these software wallets, the security is not great. You can be hacked, whereas banks have got like, good security. So that's going to have to improve. There's going to have to be in the next bull run, these companies that they're going to have to create a place where you can literally buy and sell Coinbase on the exchange, buy and sell cryptocurrency, sorry, on an exchange, whether it's Coinbase, and literally be able to move those assets straight to a wallet. Hardware wallet, if you've got big money and you want to leave it there, maybe there's companies that can actually look after your hardware wallets. But if you're a retail, if you're somebody that's got 500,000 worth of Bitcoin, then yeah, you go use those companies. They'll keep the actual physical device for you. So that if you do, you can't lose it. They're responsible for it. So they'll keep that for you and then you just pay them a fee. But that fee, yes, if you've got 500,000 is good. But if you haven't got 500,000 and you just got like £1,000, it's not feasible to pay a third party that. You're going to look after yourself. And if you lose it yourself, that's your fault. So you'll want to go for a software wallet. But the problem is a software wallet, like I said, is still a growing industry and they can still get hacked. But that's kind of the two options now that unless Coinbase, I feel like it's still fairly safe to put your money there. Like me, I only have money in Coinbase. I have some money in Binance. Binance is still off not regulated. So I mean Binance, if Binance collapses, that's going to be a massive blow. Coinbase, I don't think Coinbase would collapse. If Coinbase collapses, then the crypto industry is basically over. Coinbase is like I say, is regulated. It doesn't. They've come out and they've said they're not going to be spending everyone's money. And again, this is what's kind of going on to what's going to happen now is that a lot of these companies are saying they're going to do proof of reserves because your assets should be backed up 1-to-1. They should have your $10 crypto backed up with $10 crypto elsewhere so that you never lose out. But that's what's been happening. So that's going to be it though. It's been a big week, but not a great week for crypto. Listen, I'm still a long-term believer. I still think there's going to be a point, 2024, 2025, whenever, where once we get all these bad actors out, and probably yes, there's going to be some sort of regulation to give people trust. Once there's going to be better ways for you to store your crypto, whether that's exchanges improving their security, getting better terms due to them being regulated better. There's better options in terms of hardware making it easier, or the software wallets are got more security. That there's going to be a point in time where this is going to be a great opportunity to buy into crypto, and it's going to be, even if it's just a Bitcoin you're investing into, you're going to be able to then put in that money and just leave it especially if you've got time on your side, and you're going to be able to leave it. And listen, if it goes to zero, it goes to zero. If Bitcoin goes to zero, everything else is going to zero. I mean, maybe the technology will survive, and then it's a case of getting into the technology, but how can you do that? There's not many companies you could actually buy that give you exposure to the technology. Now people are creating technology and they're building, and great. If you're somebody that wants to build a technology in this industry and use the blockchain to build something, that's great. Building something on Web3, building these DeFi products, building something NFT. But as a retail investor, it's very unlikely with your £1,000 or £2,000 or £5,000, you're trying to build a project. You're just trying to get exposure to the cryptos. And I do still believe that there's going to be a generational once in a lifetime opportunity. But like I've been saying, I don't go all in. This is not investment advice, but I've been saying it, don't go all in. They're still gonna go lower. We're still hitting that 10k, 8k. We're still gonna have probably more exchanges go bankrupt. So let's see. So just a brief rally on the stock side, on the stocks though, and some good news here. So we had the inflation report out this week, and it literally came in lower than expected, in a sense that we had the S&P, the Dow, the Nasdaq I think it was the biggest rally in like 2 years. So in a sense, inflation is going down. Now, why is inflation going down? Is supply side increasing? We don't know. Or is the Federal Reserve doing their job? We know when interest rates increase, prices will go down, but there's always a lag. Now, in that side of things, the bank of in that side of things, um, if the inflation is going down, the market is rallying on the expectation that the Fed will say, you know what, we've done enough damage. Inflation is going down. We're going to pause, or we're going to lower the increase in rates. Me personally, I don't think that's going to happen. They've already said they ain't going to do that. They've already said that they're going to keep going full steam ahead. So again, I'm not calling this the bottom. The only time I'm going to call the bottom of the market is when, and this is not even the bottom as in the bottom to go all in. The bottom is when the Fed say, listen, we've got inflation to the level we think is acceptable. We're stopping increasing rates. At that point, you can start increasing your pie into the market. But until we get inflation back to lower and we get more quantity reason to then boost the economy again, which I don't think is going to happen anytime soon, maybe 2-3 years, then that's when the real next bull run will start. But until you see the Federal Reserve say we're not increasing interest rates, that's when you can be like, okay, you can have more confidence. We're basically near the bottom. But I don't think we're near that anytime soon. They're going to meet in December. We'll see what they say. But I mean, yes, the inflation report has come in light. It's been a good rally for stocks. And this is why, like I said, you need to be nibbling in. You need to be like invested somewhat. Going all in? No, but invested somewhat, If we look at one of the stocks, I think Meta, I've actually got my average down quite low on Meta. So it's been a good week for me on this stock. Obviously, they rallied on the low inflation as all did the tech stocks, obviously as well. Mark Zuckerberg saying he's laying off, so he's probably giving up. He's given up somewhat on his Web3, and he's gonna try and cut costs on the market like that, and they've rallied. And if you look at this, like if you look at Meta, look where they've been. This is a company that was at 400 and is now, at 100. This is lows that they haven't seen. I mean, since 2018. That's like what, 4 years? Like I said, would I go all in on Meta? No. Would I? Would I just start increasing my exposure and then, when it gets lower, I buy more. When it gets higher, if you want to trade it, you sell. Cool. But definitely not going in. But some good signs with the inflation coming lower. But it's all on the Fed, and I don't believe the Fed are going to say, oh well, we had one good inflation report lower. That's it now. Interest rates are stopping, and even if they did say that, we're still going to need them to now go into reverse and do more quantitative easing, which again I don't think is going to come anytime soon. So it's a good sign that we are probably past peak inflation, but I feel like in any market, in stocks and crypto, we still got more pain to come. I personally still wouldn't go all in. I'll keep up to date with things that's going on. I'll listen to my channel to keep up to date with things. Keep your cash. Make sure you're getting cash there, so you're ready to execute. Keep nibbling in to get your averages lower, and then I feel like in the next couple of years or whatever, we're going to have an opportunity to really create some generational wealth, and this is the opportunity. If you've got the time, obviously, if you haven't got the time, then, but if you've got a 5 to 10 year horizon, come on, everything goes up and down. If it doesn't go and it just keeps on going down, well, then that's something that's never happened in the whole history of the financial and crypto markets. And just unfortunately, you happen to invest at that time, but cycles always repeat themselves. But cool, that's the money effect. And yeah, hope you enjoyed the video. Please like and subscribe. Peace.